We are a commercial and professional investors, okay? So we don't pay the price that typically the individual investors will do. Help me with the numbers, but if we take the 79 apartments and we sell them one by one, we'll probably end up with 22 million.
240 was about £240,000 an apartment, yeah.
Yeah. So
around 23, 24 million is
24. How much do we pay for this?
We paid about 21.
Yeah.
Jazakallah khair everyone for coming. I'm here with Dominic, Adnan and Ruggiero, the latter two from Rasmala who've actually flown in from Dubai to be with us. So commiseration to you both for that. And Dominic, who you live here, but you actually you made the remarkable decision to move from New Zealand, of all places, to the UK permanently.
A long time ago, 35 years ago, but
You're still regretting it?
I do, but lived all over the world, but I'm here.
Brilliant. Right, so guys, I'm going to ask you a very difficult question for which there is no real right answer to, but I'll ask it anyway. I don't know, whoever feels bravest can go first. Where are property prices going in the UK?
Oh, resident expert.
the Italian living in Dubai, being the resident expert of properties. Actually, it depends on area to area, postcode to postcode. Okay, so in central London, where there is the most demographic pressure, you might have a little bit of property analysts are expecting a little bit of a downturn, maybe 1-2%. Okay, in some secondary areas, you might even see 8-10% down. That's the expectation.
So hang on. So you're saying in London, central London, that it won't fall as much, but in other areas it will.
It has to do also with the proportion of properties bought with mortgages. Okay. Right. See, in central London, you tend to have a lot of buyers that don't really need a mortgage. Okay, like even overseas buyers. Yeah. Okay, they are cash buyers, so they are not really particularly affected by high mortgage rates. Outside, where people actually need mortgages, they will be more impacted. If you see, for example, today's the results of main house builders like Persimmon, okay, they already can see that the sales are slowing down markedly. When the sales slow down, the prices will start falling as well.
Yeah. And so how should we think? So two questions for you. One is, how should an individual, I'm sure many people here might be thinking about buying a house at some point, or a second house or whatever, and they're thinking, should I wait or not? So that would be an interesting question to get your sense on. The second question is, as you've described it, how are you as a fund, as a strategy, thinking about benefiting or navigating these waters?
So if it is a question of buying your first home, you need to buy. There is no question in trading. You are looking at a little bit of volatility, but you are making an investment which will last for decades. So really the entry point is not important. As for your second, your third home, again, what is it for? Is it for your children or is it buy to let? Okay, I think that there are a lot of the incentives for the buy to let have diminished. I was living in this country for many years. I arrived in '96 when really the boom of the buy to let started, and that was the time to do it. People have built huge property portfolios, but more and more it's clear that the government wants to disincentivize individual investors to buy more than one house. So that probably it's preferable to use REITs if you really want to invest in the sector. How we think about it? Well, we are a commercial and professional investors. Okay, so we don't pay the price that typically the individual investors will do. Help me with the numbers, but if we take the 79 apartments and we sell them one by one, we'll probably end up with 22 million.
240 was about £240,000 an apartment, yeah.
Yeah. So
Around 23, 24 million is.
24. How much do we pay for this?
We paid about 21.
Yeah. So you see, we are when you buy in bulk, you already get a discount. Now also we are not here for the short-term trading. Okay, so we pay. Okay, it's fine. But what is important for us is the growth of the income. Of course, it's important, the growth of the capital, but what is more important for us is the growth of the income. And we are not
Why is that? Why is that?
because that's what we actually pay out. We are focusing on paying dividends. Okay, we are not going to sell the building to get the profit. So the on a long-term basis, what will be, I mean, usually in properties, sometimes like 3/4 of the returns is just income. Okay, so that's what we are focusing. So when you enter at a good price, okay, that's where your base of measurement start. We are also not just taking a rent from the market. Okay, we are really working hard to increase that rent. This is called operational real estate. I mean, you see, we live in this building. We are not just like an agent just showing. The tenants come here and we actually make this building work as it was a hotel. Okay, so there is a lot of extra premium that we can generate by actually actively working and making the place better for the tenants.
And Dominic, I wanted to come back to you about, just the potential of this new way of living, right? Where you've got these shared spaces in and amongst, let's say smaller apartment blocks. Yeah. How do you see that playing out, as a trend?
It's a huge trend, but just going back to what Ruggiero is saying, what we call it is sweating the asset, making sure that we are absolutely sweating the asset and getting the most out of the asset, pushing rates, putting rent where, I'll come back to this building in a moment, but in the service department, we grew our rates by about 60-70% last year. So that's where you sweat the asset. We had the same buildings that we had 4 years ago, but our rates have nearly doubled. So that's all about making more money within the building. Coming back to your question here, what is happening in the world, especially in this part of the world? I'm a baby boomer. I can't see many baby boomers in the room, but typically a baby boomer, and I was talking to some people upstairs, 90% of baby boomers bought property because our parents were like, you've got to buy assets. The millennials, which is between 26 and 34, only 40% of those people are buying assets. So it's a massive gap, and there's a few reasons for that. A, they can't afford it. They can't afford to get on that ladder, and I'm sure a lot of you have got kids thinking how to buy assets. The other thing, a lot of the kids don't want to be tied to an asset. They don't want to have a building that they've got to pay rent, and so the third thing is people want to live in a nice environment. Many of you will know that the rental market in this country is very difficult. There's sometimes a house with five bedrooms run by a landlord who really doesn't care. I have 4 children, and my son 2 or 3 months ago was waiting 3 weeks to get a bathroom fixed. That doesn't happen in this environment. So in here you're paying about 10 to 15% higher premium than you would around here in a normal rental. With that 10 to 15%, you have a full-time concierge, you have security, you have housekeeping if you want it, and you have maintenance. So if a tap doesn't work, we'll fix it that day. That's the difference. And so it's a nicer way to live with all these facilities.
And Dominic, how big is your team? Like, how many things?
It's just me. 2 of them are up there. This is the head of finance.
There's a
Cam.
plumber. There's a plumber in there.
Here's our housekeeper on the right. So Cam runs our finance across Flying Butler and Mura. And Bala up here is our COO. And John at the back is our head of real estate. If he hasn't given you a card, I'm sure he'll give you a card. So we have about 87 people in the UK. About 50% of those are in the field, housekeeping and maintenance.
Amazing. And how many assets do you manage?
So we're spread across 46 blocks at the moment.
Primarily in London?
In London and the southeast, yeah.
Ruggiero.
you know, there is one thing interesting. I know you like to ask questions, but
He's Italian.
just to let you understand what it really means, this business. You know, I flew yesterday, and it was the first time I was actually myself staying into a flying Butler apart. So Dubai is 4 hours ahead, okay? And I normally wake up at 4 o'clock in Dubai. So I woke up at midnight in London. So I pushed it until 2 a.m. I pushed it to 4 a.m. Okay, that's okay, that's enough. I need to wake up now. So what do you do at 4 a.m.? Okay, so I came to the gym. But the concierge was doing the security round, and there is a code to enter into the gym. It says, okay, how do I know the code? So I picked up the helpline, and I called the helpline of Flying Butler, which is 24/7.
Which was Bala.
Who's asleep?
One ring, 2 rings, and the person answered the phone, okay? And then I said, okay, look, I am here in this property and I need the code to enter into the gym, okay? So he ran through the security check. Okay, what's your name? What's your mobile number? And he gave me my security code to enter into that. And then I figured out what is the difference between a service, something which is service, something which is not. Okay. Now, obviously, that's one example. I mean, not everybody is flying from Dubai the previous day, but this idea of service, it's something intangible. Okay, but you understand it when you actually experience it.
Absolutely.
So one more thing, and then you're going to ask a very tough question to Adnan. We are bringing hospitality into BTR. A lot of the BTR operators in the UK just operate as a BTR unit. They have rentals, they may have a concierge. We're going to mix use, but we're also wanting people to feel at home. This is their house. This is where they live. It's a 12-month let, so we want them to feel very much. My background's hospitality. I was in hotels around the world for 27 years. We have a hospitality mindset around looking after our guests.
Absolutely.
I should add, I think.
You see, Adnan was like, look, I'm going to answer whatever I want
just
to answer.
before so that he doesn't ask a tough question of me. But Dominic, spent his career in running Marriott's operations across major regions of the world, EMEA and Australia and East Asia.
Hong Kong, yeah.
Yes, so he comes from a lot of experience, and that's why he's brought in a lot of this service mindset to the business. Now, we want to serve our guests who live here. I used to call them tenants, but Dominic corrected me to say, no, they're guests. So we want to service our guests, but we also bring the same kind of service mindset to the investors in the fund as well. So they will feel with a lot of transparency. We are, always trying to introduce what we're doing with them and keep them updated on things.
So imagine that today you are our guest. Okay, I live here.
They are your guests.
Okay, so but imagine now reverse. Imagine that you wanted to host a party like this at your home. Okay, you see, it would be difficult. You will have to go and hire a venue. Here, it's available to every tenant. Every tenant can actually organize something like this. Because all these facilities are shared facilities for the tenants.
So what Ruggiero is talking about, because I think the people on the screen maybe they don't know what he's talking about, is there's a area. What are we calling it?
So we have a communal come dine with me area where you've all eaten up there, but that's an area where you can come out of your apartment and mix with people. We found through the whole COVID period, people were lonely, so they can, you can go to your apartment and not talk to anybody. But a lot of people want to talk to people, so you can go down and cook in there. You can use that facility. You have a working area in the lounge. You have a gym, which Ruggiero worked out, and you're able to move around the building in a very nice, relaxed, communal sense.
So guys, I'm going to come to you in about 2 minutes. If anyone has any questions, we'll probably take about 3 questions.
Ask them.
Ask them to Adnan. But I want to come to you, and I want to ask you a very simple question. Just one top tip when it comes to real estate investing. because you're all in the real estate world. One top tip, and it has to be short and sweet. I'm going to start with Ruggiero.
Never sell. Just buy and hold. Time is your best friend when it comes to real estate.
Fantastic. I was talking to Ruggiero earlier, and I said, look, Ruggiero, how are you thinking about the whole period for Hemel Hempstead? And he says, till Yom al Qiyamah.
Yes, that's the holding period. Now it's all. That's it.
It's 5% every year, right?
Exactly. Just compound it.
So I was going to say exactly the same, that it's, as they say, it's not timing the market. You asked about what's a good time to enter the market. It's not about timing the market, but time in the market. People say that. And we've kind of taken it to heart. And the fund that we're here to talk about today is called the Generation Living Solutions. That's the name of the fund. And that's because this is really for building generational wealth for the investors. So effectively, we're buying these assets to never sell.
Dominic.
Find a great operator.
I like it. It's also true. Great. So we are here today in Hamilton House in Hemel Hempstead, which I presume all of you know that because you've got here. And I wanted to turn to you first, Dominic, just to explain to us, what exactly is this thing that we're sat in? Okay. What is contained in this building?
So big welcome. Welcome to you all. It's lovely to have you here, Ibrahim and all your team. We're really delighted to welcome you and host you this evening. So just a little bit of history of what we do, because at the moment I'm kind of representing the operator. So we're an operator, we're a hospitality company that we operate over 450 apartments, serviced apartments in London and the Southeast, and we have done for over 20 years. So we've been in that space a long, long time. Then we have the build to rent, which is this building. We launched our new brand 2 weeks ago in this building with a number of people again, but Mura Living. So this is our first build to rent building in the UK.
What does build to rent mean, Dominic?
So build to rent pretty much is people renting for 12 months. So I'll come back to the building. So just an example, in the US, it's called multifamily. Multifamily is renting in the US, but it's a building with facilities. Multifamily in the US represents about 40% of the residential market. Build to rent, which is exactly the same thing, is about 3 to 4% in the UK market. So huge potential. So this building, our first build to rent building, so many of you have walked around, where we have 59 build to rent apartments here, and we have 20 serviced apartments. So one of the first operators in the UK to mix use a building. And the reason we're doing that is to allow the build to rent have all the facilities. You've seen a gym, the working space, the kitchen. We're also going to have a media room at the back for 16 people, and outside down to the left is going to be a cafe. So all those facilities are part of what your rental will be. What we also believe, the reason that we wanted to put serviced apartments, which is a short let, is to allow our serviced apartment guests to have these type of facilities. It pushes the yield, and I'll let these experts talk about pushing the yield. And as we grow build to rent, which is going to be across the UK, we're going to have that 20-30% element in all of our buildings across the UK. So because we'll have that 20-30%, we will grow our serviced apartment product across the UK as well.
Brilliant. That's really helpful. Ruggiero and Adnan, I'm going to come to you. Ruggiero is actually, I didn't know this, but Ruggiero has an Islamic name, Abdullah. Omar. Oh, sorry, I got it wrong. But I will always know you by
Abdullah.
Ibn Abdullah. Okay, so I will always know you by Ruggiero though, because I think it's a fantastic name. Ruggiero is he's a real character, mashallah. I find he's an Italian through and through. I've really enjoyed working with the entire team at Rasmala and Flying Butler, Mura Living, something else. I've enjoyed really working with you guys. I want to ask you, from a commercial perspective, what was the thinking behind the acquisition of this building, but also, the general strategy with this entire fund?
Sure. The idea of investing in build to rent and in general the residential space came after we decided to exit the ground rent market sector in the commercial loan real estate fund that I run. So in 2018 I set up this fund. It's called the Long Income Fund, an Islamic property fund managed out of Dubai, which buys properties with long leases, supermarkets, care homes, nurseries, GP surgeries. And we had a large portfolio of ground rents. So the freehold, okay, which is underneath the buildings. But there were some government law changes in this country which kind of stopped landlords for collecting ground rents. Okay, so we decided to exit, and we were looking at an alternative way of rebuilding the exposure to the residential market. So the problem with a residential market is that usually it is a short let. Okay, you see, a supermarket, you have a 15, 25 year of secure lease. With the residential market, it's always short lets. So we couldn't fit that allocation into the long income fund. So we created a completely new fund, okay, where we could blend both the build to rent and the serviced apartments. Because even if the leases are not very long, by having so many tenants, okay, in a single building, you stabilize the income and you lower your risk.
Brilliant. Adnan?
Yes, I think just building on these points, what we like about this strategy is firstly that it's Sharia compliant. Secondly, what we really like about the strategy from a perspective of market timing. This is a very good time to be entering the property market, and particularly for some of your investors who may be looking to get onto the property ladder in a Sharia compliant manner. They may find that prices keep going up and they're playing catch up. So it's and that's why we really value the partnership with IFG as well, is that it introduces a lot of investors to this asset class, which allows them to perhaps start expanding their property ownership. Just one very interesting point that I should also mention is that when you become an investor in this GLS fund, the Rasmala Property Fund, you also buy a portion of Flying Butler, the operator, which Dominic runs. Now that's very interesting because a lot of the other property funds that you may see in the market or other REITs, they are just purely property owning vehicles, but a lot of the upside of the management of that property tends to stay with whoever is managing those properties. But we have kind of opened the ownership of the manager as well as into the fund, so which allows the investors to have let's say a higher return on their same exposure.
Yeah, and it's presumably a little bit more stability as well, right? Because you're all completely aligned in terms of incentives.
Very true. And what we've seen is that once you've got these two factors tied in, it really provides a high occupancy from the BTR and high yield from the service department.
Well, really appreciate you guys, giving us those thoughts. Let me turn to the audience. If there's any questions, burning questions, then feel free.
As I understand it, this fund's also going to invest in student accommodation. Is that right?
What is the fund going to invest in?
So at the moment, we are only focusing on build to rent and serviced apartments. Student accommodation is an extremely interesting sector. However, it has been around for good maybe like 10, 15 years, has been growing. And it has reached a point where the big international private equity players have come really in scale. So it's becoming more difficult for a new entrant to enter. Now, if it is a matter of just developing and selling to these existing operators, okay, but to build today a new student operator from scratch, it's going to be quite difficult. So if we reach a certain scale and we are able to buy an existing platform, yes. But if you want to develop organically something from really from scratch, at the moment BTR is the place to be. Service apartments actually have been around for a long time, and there was a lot of buzz in 2016 about this sector, and then kind of they faded away. So we are re-entering, a number of investors are re-entering this market.
Thanks. Any other questions?
Yeah.
This question regarding.
So let me repeat the question. So the question is around capital appreciation. How is that going to be realized? Is that going to be realized on exit? What's the exit timelines? How are you thinking about that?
I think, thank you for this question. This is a very important question because of two reasons. Firstly, because it didn't come into the discussion so far, and also, you only make money at the end, when you get your money. So it's an important question. We have, from the start, always had one idea about this fund, is that the exit for investors is through this fund being listed as a REIT. So this is been from the start, the way that we've designed this fund is that it is set up to be eventually listed on the London Stock Exchange. That would provide the liquidity. You can your shares will become publicly listed, and you can sell these. Now, this may take 2 to 3 years because there are certain listing requirements. But what it does is that, in a way, this is, at this point in time, it's a pre-IPO opportunity for investors to benefit from. And once it gets listed, you get your exit.
Just in addition to that question, really, what you're saying, because in terms of the RIP, you're saying from the IPO, wait to be registered 2 to 3 years. Have you, as a fund, reached the minimum threshold to get to IPO status yet?
No.
That is the process which will take, and it's.
That's the question of mine was how long is it before you reach that minimum threshold?
So there are 2 or 3 listing requirements which are important. One is to meet certain diversity of ownership, and the second is scale. The scale part is actually very easy. I think by the end of this year, we may be there. But it's really about attaining certain diversity of ownership targets. And the third is, of course, leverage requirements, which in any case, being a sharia-compliant fund, we're being anyways fairly careful about keeping very low these financing levels. And all of that financing is sharia-compliant anyways.
Great. I think there was murmurings of another question somewhere over here.
What challenges are you anticipating given the current climate, cost of living crisis, raising inflation, people invest, disposable income? What challenges are you expecting, and how you plan to tackle that in this current market?
Operationally, I can take that. The rental
question time, Liz.
the rental market is off the charts, right? We started selling this just after Christmas. We didn't really put our foot on the pedal until about 2 weeks after, because everyone's on holiday, right? So we're over half full, and we believe we'll be pretty much full in 2 to 3 weeks. The rental market is crazy. There is a cost of living. We're all getting hit by that. Things have gone up a lot. So it's not affecting the rental market at all because there's a shortage of supply. So that's that. And then on the service department side, I'm talking from an operation perspective. It's costing us more to run the operation because our staffing costs have gone up, our cleaning costs have gone up, everything's gone up. So, and our utilities, obviously. But luckily, thanks to our guys up there, we locked in our contracts for a year or so. But
he's not talking about God.
Yeah, it's like I'm praying to you. But yeah, our operational costs have definitely gone up. But with regards to what we're marketing, selling, the market is hot. Service department market last year was off the charts.
And you anticipate that continuing, that trend
We had
continuing?
a bad January, so that wasn't good. But typically pre-COVID, January, February, in the service department world was very quiet. So we are now maybe going back to seasonality, but then we're already coming out. We come out in February, March, we have a total runway in March, Easter's in April. So we're hoping to pull out in March. But last summer we were running across our portfolio in 90, 93, 94, 95% occupancy.
I just want to add something very important to this discussion. It's been mentioned before, but I think it bears repeating that, you know, why we think marrying serviced apartments and BTR blocks in a single building is great for the guests because they get to experience a very high level of service. But from an investment perspective, it's even better because you see, serviced apartments, you know, are generally higher yielding because people are coming in for one night and they're paying for, you know, 1 night or 2 nights, something like 150, 160 pounds a night. So, sure, yeah, even more. So you know, from a returns perspective, it's very good. But what happened during COVID? You know, buildings were going empty. So a lot of the serviced apartment businesses realized that they are actually running a business which has, you know, risk of occupancy risk. Now, when you've got in a same building, BTR and service apartments, you can manage the occupancy by shifting between 1 and 2 if there is a market downturn. So, I mean, the reason why I'm saying it bears repeating is because this is at the essence of what we're building here, that we're able to manage a high occupancy product with the high yield characteristics as well.
Brilliant. I've got an eye on the time, guys, and I know that many of you, most of you presumably, don't live in Hemel Hempstead, so you need to go somewhere.
We have got some spare rooms.
If you want to book in some spaces, you can. I really like to appreciate, you know, first of all, Ruggiero, Adnan, Dominic, for, you know, all of the insight and putting on this entire event, and for flying out from Dubai as well, in your cases, and many years ago from New Zealand. So yeah, I really appreciate that. Thank you very much. Jazakallah khair. And finally, really appreciate all of you guys coming out as well, because I know it's not straightforward. I know the first time I was asked to come to Hemel Hempstead, I chickened out of it because I looked at the trains and I was like, oh my, I didn't realize that this is like such a trek. So the fact that you've, you know, done that and you've not been forced to do it, like many of our team, you know, feel obliged to, is really appreciated. So Jazakallah khair to all of you for coming, and yeah, feel free to hang around and continue chatting, and also make sure that you take one of the goodie bags, and my understanding is the food as well.
Please take that food. You've all got children, I'm sure. Please take the food.
Brilliant. All right. Take care, everyone. Assalamu alaikum.
Safe travels, son.